Happy Wednesday. Time for Mike on the Money. Now, today we learned the rate of inflation continued falling last month. So what does that mean for interest rates and your money? We have Mike Giordano, financial advisor with Williams Wealth Management, here to give us some answers. So, Mike, this was a pretty positive report, right?
Anything cooling in this, temperature is a positive thing. I went to the zoo the other day down in Columbia, and my daughter and I watched this gorilla coming down the hill, and it was like pounding its chest right at another gorilla. We're not at a pound your chest type moment right here.
Okay.
This feels great.
I was wondering where you were going
with that.
Yeah.
I mean, we're not like popping champagne bottles or anything right this second. But, considering where we were over 9% a year ago. Now we're at 3%. That's great. And the underlying inflation, besides like the volatile stuff like food and energy, the underlying inflation is starting to come down. So there were a lot of positives in this report. If we can keep this trend going, we'll be in a good spot.
All right, that's good news.
Yes.
And we do want to pound our chests at some point.
Yes.
Waiting for it.
There was a point to that.
Well, meanwhile, mortgage rates are back to their highs from last fall. So should we expect those rates to continue to rise?
Probably not, but it really depends on where inflation goes, because that's a big indicator. Because what happens is if inflation were to all of a sudden reaccelerate, then the Federal Reserve might have to hike interest rates a lot more. They were expecting to hike interest rates a couple of times, but after this inflation report, they may only have to hike interest rates one more time here in another couple of weeks. And so if that's the case, then yeah, we shouldn't really see mortgage rates have to spike up too much more from here. But then again, it all comes down to this inflation.
All right, and now let's talk about the stock market. The stock market has done well this year. Will cooling inflation help that?
Possibly, yes. There's no definitives here because it's hard to say how the market will play it. From an interest rate perspective, we always talk about interest rates being financial gravity. Last year, as interest rates were rising, they were putting tons of pressure on all other assets, whether it was stocks or bonds. And so a lot of the stuff, including growth stocks, really got tagged last year. This year, because it looks like we're peaking on interest rates, there isn't that pressure anymore. So growth stocks have really been able to do well, but most of the stock market has been able to do well, and even bonds, not so bad. So the key here is interest rates is a good thing. The bad thing is what will happen because the Fed had to hike rates 5% already. How much will that leak into the economy, and how much will it slow growth? So from that perspective, it could be a bit of a drag. So it's hard to say at this point.
All right. Well, we shall see. We know you'll continue to watch it for
Absolutely.
us. Thank you so much, Mike Giordano, financial advisor with Williams Wealth Management. Appreciate it, and we will be right back.